Let's talk about short-term rental investing, specifically a strategy that's become really popular lately called Airbnb Arbitrage. So first, before getting into the pros and cons and the detailed nuances of what Airbnb Arbitrage is, let's talk about just some of the variations that we have in real estate investing and some of the different ways that we have to create income in real estate. So you've probably heard of long-term rental investing. This is where you go buy a house, maybe a condo, a townhouse, whatever it is, and you rent it out on a 12-month lease to tenants, and you trade basically a great place for them to live for monthly income off of that property. Tried and true method, and I think it's fantastic. But there's more ways to make money in the real estate market than just long-term rental investing, and that's what we're talking about today. So what we want to look at is short-term rental investing. You probably know this as Airbnb, VRBO, maybe, something in the hospitality industry, right? Bed and breakfast, lots of different ways to do short-term rental investing. But there's a way to get into short-term rental investing without almost any capital up front and without the risk of purchasing a property. And that's called Airbnb Arbitrage. And you could probably apply it to VRBO or some of these other platforms, but it's become popularly known as Airbnb Arbitrage. So what is Airbnb Arbitrage? Airbnb Arbitrage is basically a sublease scenario that you work out with a landlord or a property owner to rent out their property in return for the ability to post that property on Airbnb or another platform, and then you get to keep the cash flow above and beyond that 12-month lease that you're paying to that property owner. So why would a property owner go for this option rather than, managing the property themselves as a short-term rental? And there's a lot of reasons for this, but one of the primary reasons is a lot of people don't want to take that risk. They're not sure if a jump to a short-term rental makes sense in their area, and they also don't necessarily want to do the work in order to manage a short-term rental. And so for someone to come in, offer a 12-month lease to that property owner, and then manage the property themselves as a short-term rental is a great way for the arbitrager to earn some additional income and get experience in the short-term rental market. And it's also a great way for that property owner to continue receiving a 12-month lease without any additional risk. So let's talk about some of the specific things that would need to go into this strategy, and hopefully that'll help you decide whether or not this strategy is a good one for you. So the first thing that you need to do is start reaching out to landlords. You need to figure out who out there is able and willing to rent a property to you to be managed as a short-term rental. Now, this is actually easier than you think. It's going to start out by just reviewing rental listings, reaching out to those property owners, seeing if you could take them out to lunch and talking about this opportunity. Now, some of the things that you're going to want to talk to them about are the pros and cons of going with a short-term rental opportunity. A common misconception that people have about short-term rental is that there's actually going to be higher maintenance costs, when in reality, a lot of people who run these short-term rental properties actually say that there's less maintenance and better upkeep of that property because there's more turnover, because it's being cleaned much more frequently and inspected much more frequently. So that's one big benefit that a property owner gets from having somebody manage their property as a short-term rental. The second thing that they get is they get to keep their long-term lease in place, right? Banks tend to like 12-month leases, not short-term rental contracts. And so they're going to be able to continue getting that 12-month lease, which means they're going to be able to most likely qualify for additional property purchases if they're looking to invest in more real estate by having that 12-month lease in place for you. Now, another great benefit to the property owner is the eviction risk, right? Anytime you talk to a property owner or someone who's been in real estate, a lot of times you'll hear these horror stories about having to evict a tenant or a tenant doing terrible things to the property. But with short-term rentals, you don't have people in there for longer than 30 days, which in most cities and states is that cutoff for when it becomes a long-term rental and when, if you want to get someone out of your property, you have to go through that eviction process. So that's another major benefit that property owners are really going to like about this. And last but not least is the cash flow, right? Most property owners out there are paying for somebody to manage their property for them, typically between 8 to 10% of that rent, which ends up usually being about half of the profitability on that property. And so they're able to actually completely eliminate that property management expense because the arbitrager, you potentially in this situation, is going to be managing that property yourself, or perhaps you have a team of people that help you manage those properties. But basically, they get to increase their profitability on that property by removing the property management that they're probably paying for already. So there are a whole list of reasons why a property owner should love to have someone like you come in and be the arbitrager for their property to turn it into a short-term rental rather than a long-term rental. So let's talk about the pros for you, the potential Airbnb arbitrager. One, additional cash flow. This is a great, easy, low-risk way for you to get into some additional cash flow to supplement your business, to supplement your investments or your job, whatever it is that you're doing to make money. Another thing that's a great benefit is just an intro into the short-term rental market. I'll be the first to say there are major benefits that come from investing in real estate, owning the property, having full control over that, getting the tax benefits that come with real estate ownership. But it takes a lot of capital typically to purchase a property. We're talking typically 20 to 25% down. And then you have to also furnish the property if you're going to use it as a short-term rental. And so it enables you to get a foot in the door and test out this short-term rentals option to see if it works for you. If not, it's a relatively low-cost, low-risk way of figuring that out. Speaking of cost, right? So that's the other thing that we have to consider. There is going to be a cost for furnishing and setting up this property. But relative to the cost of probably what a down payment would be on purchasing a property, it's going to be a lot less. So keep in mind that there is some cost and some risk associated with signing a 12-month lease to rent that property, but it's going to be relatively lower than purchasing the property and furnishing it after the fact. So those are a few of the reasons why I believe short-term rental investing, Airbnb arbitrage, are some of the best options out there today to get into real estate investing and to start increasing your income through real estate. And there's a lot of different ways to do that outside of what we're talking about today. And that's why I feel like it's important to have a personal financial architect to take you through all of the options and make sure they work with your specific strategy. So I know somebody who recently got into the Airbnb arbitrage strategy about 2 years ago. They started with absolutely no properties and no additional cash flow outside of their business. They started by reaching out to property owners, landlords, who had their properties listed for rent on Zillow and other platforms. Within a couple weeks, they already had a couple properties that they had under management and were getting furnished to get listed on Airbnb. That was about 2 years ago. Today, just 2 years later, they are already over a dozen properties and over $80,000 in revenue by simply just getting started and reaching out to people and having those conversations needed to get into this strategy. So first and foremost, we need to realize that with anything, it takes a little bit of work to get into it. And after that, it tends to be an exponential growth if it's something that we're interested in, if it aligns with our investor DNA, and if we're willing to put in the work to get it to something that's sustainable and passive. What we have found is those who are most successful are those who are supported. So feel free to reach out to us, fill out the Wealth Architecture questionnaire to get in touch with us so that you can have the support of a personal financial architect to help you through these types of decisions and these types of investments going forward. Thanks for watching. Hit subscribe. Don't miss out on a single Wealth Factory tip like this next one with proven ways to build your wealth.